It's Monday, September 19th, 2022. I want to get right into this video today. Let's recap what happened in the markets, what's about to happen. Love to get your opinions on this. Please comment down below. Dow Jones closes up 197 points today. NASDAQ up 86 points today. And I was watching the futures last night. The Dow Jones was down about 200 points last night as I was watching this unfold last night, and it opened up in the red this morning, and somehow, some way, markets across the board finish up in the green. Now, I do believe that this is hope. The hope that the Fed may only raise 50 basis points on Wednesday. Hope that the Fed is going to pivot after this next rate hike or early 2023. I believe what we're seeing here is purely hope right now, and is really investors fighting the Fed. But I want to start with this article on CNBC. Another interest rate hike is coming from the Federal Reserve. Here's how it could affect you. Now, so far we've had 4 rate hikes this year. Fed's fund rate sitting at about 2.25 to 2.50. The upcoming rate hike, in my opinion right now, looks to be 75 basis points. They're saying there's a 15% chance that we could see a 100 basis point rate hike. But the upcoming rate hike is going to send financing costs much higher for many types of consumer loans. Credit cards, for instance. In order to service that credit card debt, the average credit card rate right now is 18.03%. That is going to go up. We're going to see the average credit card rate go up. Mortgages, in order to borrow money to buy a home, mortgage rates are going to go up. If you take the average home at around $409,000, with this rate hike of 75 basis points coming on Wednesday, this is going to add an additional $30,600 more to that 30-year mortgage. Think about that. That's a lot. So one rate hike is going to cost you over $30,000 on a $409,000 home. And we have more rate hikes coming. Auto loans. If an auto loan goes from 5% to 6%, you're paying $1,350 more on that $40,000 car over that 72-month payment. Every time that Fed's fund rate goes up, you're paying more to buy a car, to buy a house, to service the debt on that credit card. You want to go to college, you take out a student loan. It's going to be more now to borrow this money. But you know, it's just shocking how much everything continues to go up, especially auto loans going from 5% to 6%, $1,350 more on a $40,000 car over the lifespan of that 72-month loan. More home builders lower prices as sentiment falls for 9th straight month. This also on CNBC. Home builder sentiment fell 3 points to 46. In the National Association of Home Builders Wells Fargo Housing Market Index, anything below 50 is considered negative. We're sitting at 46 currently. Nearly a quarter of builders reported lowering prices as rates surged. They're now being forced to lower prices in order to sell these homes. A lot of people are going to witness a housing collapse. I watched the housing collapse of 2008 take place. I'll never forget it. And a lot of people who were not around for that or too young to remember it are going to witness, I believe, a collapse that will be much worse than 2008. And on top of that, I believe we're going to see a stock market collapse, a bond collapse, the real estate collapse, a derivative collapse. We have so many bubbles out there, ladies and gentlemen, and we are vulnerable to multiple collapses taking place in this economy. So no doubt we are going to see historic times in America, and this is why I pray that all of you are preparing for these times. You cannot just sit around and hope that this is going to go away. You just cannot depend on politicians or bankers to fix these problems. A lot of people believe the Fed is going to ride in and fix these problems, but these are the people the banks and the Federal Reserve that created these massive bubbles to begin with, and now people believe that the people who created this mess are going to clean the mess up. And we'll talk a little bit more about the Fed, but they are so far behind. Article from The Hedge today: why are Walmart and other U.S. retailers canceling billions of dollars in orders as summer comes to an end? Walmart, Target, and so many more of these major U.S. retailers are literally canceling billions of dollars in orders before the holiday season. I mean, this is when typically you will see these huge retailers ordering lots of supplies, and they're canceling these orders, doing the opposite. So what do they know that most people don't? The holiday season is typically the busiest time of the year for retailers. I think they know that a severe economic downturn is on the horizon. And I think a lot of people right now have been experiencing a severe economic downturn for quite a while. And now these retailers see what has been taking place. They know that the holiday season is going to be dismal, and they're just not going to make the type of orders that they made a year ago or a couple years ago. They know economic activity during the months ahead are going to be much lower. So they're preparing. They're going to be cutting losses. They're going to be laying off. They're trimming the fat. They're going to be making less orders, canceling orders. We see Amazon closing down warehouses or canceling warehouses. What do they know that the average person does not know? They know that the economic downturn is here, it's begun, and it's going to get worse. This avalanche is going to be monstrous. And so they're preparing, and the question you have to ask yourself is, why are you not preparing if these giant retailers are preparing? You need to be preparing, ladies and gentlemen. Another one coming from The Hedge: Peter Schiff, FedEx exposes the myth of soft landing. Again, as I said earlier, the Fed is so far behind. Even if the Fed raises 100 basis points on Wednesday, rates remain at -5%. And you really have to wonder, why is gold and silver not going up? And I truly believe that we're seeing a very, very nice sale in the metals market. And at some point, the metals market is going to figure it out. Investors will figure it out. Institutional money will figure it out that, hey, I can't just be sitting in cash. Many people getting out of the stock market, the big fish are getting out, sitting on the sidelines with a lot of cash. And at some point, at -5% plus, we know in reality it's much higher than that. People are going to have to protect their cash. And I think at some point we're going to see a huge run to gold, but we'll talk about more of that in a minute. In what universe, Peter Schiff says, can you fight inflation with -5% rates? And the answer is you cannot. It's impossible. The Fed will not succeed in killing inflation, but it will succeed in killing the US economy. Consumers are spending more, but they're not buying more. They're spending more, they're getting less. They're getting less quality, they're getting less service, and they're spending more in order to do it. Peter Schiff goes on to say layoffs are coming. And I truly believe that if you have the means to buy a little bit of gold, buy some silver, diversify your portfolio a little bit, and this is not financial advice, but I think that this is a perfect time to do it. The deeper we get into this collapse, the more I'm convinced that there's never been a better time to own physical assets like gold and silver, the most or the two most undervalued assets on planet Earth, in my opinion. And at the prices we're seeing right now, I think there's no doubt they're a bargain. Now, I'm going to buy more gold this week, but I'm going to wait to see what happens on Wednesday. I believe we're going to get 75 basis point rate hike, and I believe that will put pressure on the metals market. I was really considering buying more today, but I'm going to hold off a little bit. Many of you, I read in the comments, are going to do the same thing. So I'm going to hold off. We'll see what happens on Wednesday, and then I'm going to pull the trigger and buy some more. The Fed is effed also on The Hedge. If you get a chance, check out this article, but I'll paraphrase a little bit through it. The Fed cannot tame inflation without effectively bankrupting themselves, except central banks don't go bankrupt. Neither do countries that borrow in their own currencies. Instead, they will go bankrupt in a whirlwind of money printing and inflation. If they go back to monetizing debt despite nearly $9 trillion spent annually on economists and operations, they go broke, and so does the currency. And we go back to Zimbabwe. Look at history. What happened to Zimbabwe? So they're going to go from conceptual to the reality project Zimbabwe. And people think that it can't happen to America because it's America. That's their train of thought, that nothing bad can happen like this to America because it's America. That's a terrible, terrible thought process. And if you believe nothing bad can happen because you live in America, you're clueless. You're clueless to what's happening right now, and you're going to be an absolute victim of this economy, a victim of this collapse. So you need, please, get out of the matrix, wake up, see what is happening with your own two eyes, the amount of businesses that are shuttering, what the real cost of inflation, what it's doing to the middle class, to the poor, to the standard of living in America. If you are not protecting yourself from what is happening, you're going to be a very, very poor, financially poor individual. World's largest hedge fund. Article on the hedge today. Bridgewater and Associate, the world's largest hedge fund, is bracing for a prolonged stagflation period. Stagflation is going to wipe out a lot of people, ladies and gentlemen, and there are so many warning signs, so many canary in the coal mines, and so many indicators, yet people still hoping that the Fed is going to be their friend, hoping that the Fed is going to save the markets, hoping that if they watch their computer screen long enough, that their cryptocurrencies are going to 1000x. Ladies and gentlemen, it is game over for all of this. And I feel really bad for a lot of people who ignored the warnings and did not take time or make the sacrifices to prepare. Rebecca Patterson, Chief Investment Strategist at Bridgewater, says recession is inevitable. We all know we're in a recession right now. I'm going to go one more, and I'm going to say we're at the beginning stages now and have been in the beginning stages of a major, major depression. She doesn't believe the Fed will pivot. It would be far too damaging to the economy and the ongoing tightening. She expects gold to outperform just about every other asset class. And you know, the CEO of Bridgewater Associates, Ray Dalio, and he came out a while back saying you need to be adding physical gold to your portfolio. And this is a historian that looks back. They've studied gold, going back over 1,000 years, and the importance of it to hedge against inflation, to protect wealth. Nobody's saying to put all of your money into gold, all of your money into silver. And this is not financial advice. Let me be very, very clear. On my videos, all of my videos, past and present, I do not give financial advice. I am just simply speaking with all of you what Ray Dalio is saying, what Rebecca Patterson is saying here, and history. That's it. And you have to draw your own conclusion and see if this is right for you or how you're going to prepare and how you're going to protect wealth. But for me personally, I don't see any other place to go right now other than cash, gold, silver, and land. All this speculation of a Fed pivot will be countered by the Fed by monetary tightening. Wall Street is now fighting the Fed. Example, look at today's market. Is that Wall Street fighting the Fed? We're talking 75 to 100 basis points on Wednesday, 8.3% inflation. We're looking at literally every sector across the board just being demolished this year in these markets, and yet the market opened up down today but closes up. How do you explain that? Is it algorithms? Is it the plunge protection team? Or is it just this speculation and hope and the retail investor coming in and propping this all up? Patterson expects gold to rise. Both China and India, their demand will continue to send gold prices up. No doubt about that. So I think it's very, very important. People continue to ask me a good, reliable, honest place to buy gold. I have a link down below, SD Bullion, so check it out. Also, a good way to make sure when you buy gold from anybody, or if we get into a situation where you're dealing with a private party to sell an asset for gold, make sure you can verify that it is real, and you can use the gold balance that a listener and subscriber named Ryan, who works at a upscale coin shop in San Diego. He's got a few left. I don't know exactly how many, but he has some more of the gold coin scales, or excuse me, gold coin balances. So check that link out also down below if you want to get one of those, $26. And I think it's a great little tool and asset to have, because when things do implode, somebody's going to knock on your door and say, hey, I want to buy a cow from you. Do you have, can I buy something from you? You may be selling something. You may need to raise capital. You may want gold. How do you verify if it's real? So make sure you have one of these gold coin balances. I think it's money well spent. You'll sleep better at night. You'll be able to verify that that gold is real 3 different ways. So check that out, link down below. Denver set to give 140 homeless people up to $12,000 in cash as part of basic income program. This is why we're in big trouble, ladies and gentlemen. We cannot stop spending. We cannot stop giving out free money. We cannot stop paying people's debt. And we cannot stop spending and giving money to the world, countries all over the globe. Yet we have infrastructure crumbling here. We have so many crises here, from homeless to drugs to you name it, and it's not being resolved. And we're going to have the Fed raise interest rates while the government continues to spend more and more money, while they continue to tax us more, bring in more tax revenue, and it's never enough because the spending never stops. We can talk all day about preparations, but none of this is going to resolve itself until the spending stops. We've got to tighten it in. And we know that that's not going to happen anytime soon. And that's why I believe we're going to continue to see a lot more inflation in the United States of America. And this is why you need to be preparing for it. Now, the government may be out of control with spending, but you can control your own spending and your household. And that's what we need to do right now. We need to get our own house in order, get our spending in order, get our debts paid down, get them paid off, and get out of this debt slave mentality. Again, the country, the government is not going to stop. And this is going to be detrimental and catastrophic to the future of this nation. All we can do now is worry about ourselves and our own households. And one thing we can all do right now today is spend less. I think that that's one great preparation I can advise all of us to do today, and we can all do that, is we need to tighten up our own household budgets and get our own houses in order. This ship has hit the iceberg, ladies and gentlemen. We are taking in so much water, and the ship is going down. It is going to sink, and you need to have a lifeboat ready to go. If you don't, you're going down with the ship. So I'm going to leave it there today. It'll be very interesting what transpires this week in these markets. But again, at the end of the day, it doesn't matter. This economy has already collapsed. It's done. And sooner or later, the stock market is going down with it. The housing market, in my opinion, is going to be what brings it all down. Because when people are getting laid off, as rates now have doubled compared to where they were a year ago, and people cannot afford a mortgage, this is going to be big, big trouble. And this is something they're not going to be able to cover up. Also, I don't believe the Fed is going to pivot anytime soon. And I know people are hoping that the Fed will pivot and that we'll get back to this casino type mindset in the stock market. But think about this. What if the Fed is going to purposely crush these markets? Imagine the wealth that is going to be lost and transferred to other places. And you have to ask yourself, are you at risk if you're in these markets? Is your pension at risk? So start critically thinking for yourselves and start building up some kind of plan where you are putting the odds in your favor that if something breaks over here, you have something over here to protect yourselves. I think you need to have cash. You have to have gold. You have to have all emergency essentials ready to go. just a thought, and make sure you have security. I cannot stress security. The amount of crime that we're hearing about on a daily basis is unlike anything we've ever seen in our lifetime. And it's really, I think, never been seen in this country before, the type of violent crime that is taking place. So I'm going to leave it there today. A few things to think about. Comment down below. What can we all do today to add to our preparations? What can the average person do today to add to their preparations? Maybe I'm not thinking about it. Maybe you know something that we're all leaving out. I can't list everything. We'd be here all day. But what do you think are maybe one or two or three of the most important things we can all add to our preparations starting today? I would love to know your thoughts on that. Please comment down below. God bless all of you. Thanks for watching. Please subscribe. Give this video a thumbs up. Share these videos all over the place. Share it all over your social media. Share these videos with your friends. God bless. Have a wonderful day, and I look forward to speaking with all of you very, very soon.